If you are managing a high-performing career, you've already run the standard playbook and run it well. Maxing your 401k, maybe a Mega Backdoor Roth, watching your RSUs vest year after year. Those are smart decisions. I'd have done the same. But once household income moves into the high six figures, the biggest opportunities stop coming from saving more. They come from making sure every new dollar works as efficiently as it can. Let's start with something most ISU holders already understand: the vesting event. ISUs vest, they're treated as income, and payroll withholds a flat 22% regardless of your actual bracket. Real bracket is higher. That difference doesn't disappear. It shows up later when you file your tax return. New to this, or a few cycles in, you've probably wondered, does it correct itself? There is one rule worth knowing here. Once your bonus and RSU income cross $1 million in a year, withholding above that line jumps to 37%. For that slice, that's actually good news. You're almost certainly already in that bracket, so it's essentially covered. But it only applies above 1 million. Everything below stays at 22%, no matter your bracket. The gap doesn't grow forever, but it doesn't undo itself either. And this is where the conversation starts to change. You've already maximized accounts, built habits, done the hard part well. The question was never whether those strategies work. They do. The real question is what happens after, when it's less about finding another account, but more about how the next dollar fits the bigger picture. When people hear life insurance, most think of one thing: protection. That's the original purpose, protecting your family or business if something happens to you. But life insurance isn't one design. Some are built purely for protection. Others are structured so part of the premium also builds cash value, an asset you own, which may offer flexibility later in life. The question isn't whether this beats everything else. It's whether it solves a problem your tools don't already solve. This is where cash value becomes relevant. Every financial tool has trade-offs. A 401k gives you tax advantages, but limited space and rules around access. A brokerage account gives you flexibility, but growth can trigger taxable events. Cash value inside a properly funded, permanent life insurance policy works differently. Funded with after-tax dollars, growing according to policy contract, with lifetime access through policy loans. Not because the money disappeared, but because you're accessing value you already own. Now, let's connect this to something many in Washington state already know: equity compensation. Less understood, hold those shares or reinvest the proceeds. And if that money grows, selling later triggers a second taxable event. And Washington state adds another layer. No income tax yet, but it does tax capital gains on certain realized gains. The real question isn't just how much your ISUs became worth. It's how this asset fits your financial system over time. Now, I want to be clear what this is not. It's not a 401k replacement. If you still have tax-advantaged space, start there. It's also not for money you will need short term. Here's what most people miss. Every policy splits into two parts: protection cost and accumulated value. Heavy death benefit, minimum funding. Most of each dollar pays for coverage, not growth. Done right, it's the opposite. Appropriate protection, funded efficiently. The question is never, does this work? It's whether it's right for your situation. This way of thinking comes from my career. Before becoming an independent insurance producer, I spent 20 years in corporate finance, where the question was never, where's the product? But, what problem are we solving? I am independent and licensed in Washington, so I evaluate solutions across carriers, not just one, and I am clear where my role ends. I help identify protection strategies. Your tax returns and broader planning stay with the professionals you already work with. Let's make this practical. I've built a simple RSU withholding calculator. It's very simple to use. Say someone has $250K base salary plus bonus and $200K in RSU vesting. And they are maxing out their 401K. It shows the gap between standard withholding and what you may actually owe. Enter your income, RSU amount, filing status. Takes about a minute. If it raises questions, schedule a brief conversation with me. We'll see if there's something worth exploring. If not, that's useful information too. My goal isn't to put everyone into a policy, but to help you decide with better information. Take a look, run your numbers. We'll go from there.